I am actually going to revisit what we had looked at earlier, which is NCC, Nagarjuna Construction. Now, when we looked at it towards the end of May, early June, what I had mentioned was that the stock was on the verge of staging a breakout upward. Now, because the market was so pressured at that time, the breakout did not happen and the stock has actually pulled back. Now, the pullback has been pretty deep and quite destructive in the sense that through the last couple of months it has actually fallen more than 30-35% from the price of about 120. Now, it's traded down to about 80 or even slightly sub 80 levels. Now, what is interesting here, again the money flow indicator is what I am using. Now, you can see here that the money flow indicator, where I have circled it here, there has been no let go of the overall movement towards the stock, the money flow towards the stock. So, what has brought about this big decline? It is this mutual fund realignment, which saw almost 2 crore shares being sold in the market, I think 1.8 crores or thereabout. Now, if you see the holding from March 18 quarter and June 18 quarter, you will find that there is almost a 2% decline in the institutional holding. Fundamentally, nothing much has changed for NCC. They still have those very huge orders, the largest number. This is also with much better margins. There is a shift of focus to domestic execution. They had raised this large 500 plus crores by way of QIP earlier in the year that should aid execution. There is nothing wrong or nothing changed in a major way as per fundamentals. What it has done is corrected to about 38% level on the charts over the past 2 months, and it is now trading down into support. From 80, it might probably fall to about 75 or thereabouts, but that is a very small risk to run for a stock which now looks to have only declined on MF realignment selling. So, I think the way that situation remains unchanged as far as the fundamentals are concerned, and the fact that the technicals are not really diminished in any manner, is just pulling back into support, and that support will enable us to buy into this stock at a more favorable rate with a lesser risk to reward kind of situation. I do believe that stock can actually move up again to do a retest of the previous highs around 115.20. That is a pretty decent amount of move that one could expect. Money flow indicator remains intact. Positive momentum remains intact in the stock in spite of the fall of about 30-35%. So, the present pullback is actually a very good opportunity to buy into NCC. This is a low risk opportunity.